Steve Rhodes.
Good morning, all you wonderful money masters out there. I'm Steve Rhodes, host of the Trader's Edge. Thank you so much for joining us this morning. What a great way to start the day. And for everybody out on the West Coast, it's been up maybe for a bit, or if you're just waking up, it's a good time to stretch, good time to change your body posture, if you will, change your focus. And thanks so much for joining us, everybody else around the world. Those that are catching us on the archive in New Hampshire about noontime or so, thanks so much for joining us. And, folks, you can always reach us at 877-927-6648. This is absolutely my favorite thing to do, my favorite time of the day. I enjoy being here with you. I'm going to absolutely teach you something. That's what it's all about. Now, the easiest way for me to be able to teach you something would be to watch us on TigerTV. And all you have to do is go to the homepage of TFNN. You'll see a tab up at the top. Click on the tab. You'll be able to watch this show live. You'll see the charts that I've got on my screen or anything that I throw up on my screen. And it'll be so helpful because what we're doing here is we're helping you to understand patterns that exist in the marketplace. And these are patterns that are what I call non-random patterns. And many stocks, many screens that you look at, currencies, commodities, whatever it is, many and a significant number of them have non-random patterns. There's some that are psycho stocks, if you will, and it's kind of like, you almost take a look at people. We each have patterns, but there are psycho people. They don't have patterns, really, if you will. In this case here, the stocks that we look at, the charts that we look at, it's nothing more than a culmination of all of the patterns of fear and greed. If you caught yesterday's show, absolutely what I was talking about was it was greed that we were going to be taking a look at, and we were going to find out what the markets were going to communicate to us. What we always do when we start off the day here is we go around the world, we take a look at what the world is communicating to us, because when it comes to the marketplace, it really is a one-world marketplace. If it wasn't, who would care about Greece from the standpoint of how it might impact your stocks, your holdings, your financial information? But it's not. It's a one-world market, and the stock charts here are able to really tell you what's going on. Good, bad, or indifferent. I don't carry one opinion or another. What I do is I look at the stock charts. I try to identify a pattern, find a place where probability-wise it makes sense to take a position. I know that that probability-wise and with the right money management, folks, that we can make money. We can make much, much more money than you can make any place else other than in this market. From a short-term standpoint, for sure. From a longer-term standpoint, I can teach you how to compound what it is that you've got and just simply continue to grow it. So, again, thanks for joining us. And when we talk about patterns, one of the patterns, and I mentioned this a couple of days ago. Now, I'm originally from Detroit, so a Tiger fan, and fell asleep last night and didn't catch the homer. I guess I woke up right as, the game was going off and, Detroit had lost. But when I'm talking about patterns there's a player on Texas, last name is Cruz, and, he was in his series against Tampa Bay, I think he was like 1 for 15, something like that. And he all of a sudden, I think he's hit 4 home runs in 5 games playing against the Detroit Tigers. Now, what really changed his pattern was when he took a fastball into the chest and into the wrist or what have you. Big guy, and he was on the ground just, in tremendous pain. And his pattern, when he took that ball, his pattern was changed. His pattern was changed just like that. In fact, if I were the manager of the team and he gets into a slump, what would you do? Yeah, you tell him, stand up against the wall. I'm going to throw out. Get one of our, pitchers that can throw a 100-mile-per-hour pitch and throw it right at him. Let him take it because, hey, he wants to hit the ball. And that seemed to really change his focus, his pattern. Do you think after taking that pitch the way that he did, do you think when he stepped up to the plate, did he step up with a different set of focus than he probably did when he was 1 for 15? When he was 1 for 15, all he was thinking about was, can I hit? When am I going to get a hit? Something negative, if you will, right? And in this case here, his focus changed just like that because he all of a sudden had laser instinct. Now, a batter, folks, they're making a decision in about 0.2 of a second whether or not to swing or not. And what their focus is on the pitcher. In our case, as a trader, our focus is on the screens, our focus is on the charts, our focus is and if you're having a bad trading environment, what you might want to do is you might want to change over to a different coach, if you will. Sometimes, you need to be coached a little bit. Maybe that's a way of having a fastball thrown at you because it's a different way of thinking. Somebody like myself, Tom, Basil, David, Larry, we're all here to really help you get a different set of focus, if you will. And, but you need to change your pattern. So if you're in a pattern where it's not working, or if you're in a pattern where you're riding it up, riding it down, you're not taking profits, we want to change that pattern, because when we take a look at this consolidation period, it's going on around the world right now. It's a huge consolidation period. And when I talk about consolidation, if you're looking at my screen right now, it's nothing more than you can see a sideways move, from top to bottom. And when we take a look at the markets here, right now what I've got up on my screen, folks, is I've got the FTSE from the UK. And the FTSE gave us a real big signal. What's very cool about the marketplace is that in this case here, the FTSE closes at 11:30 in the morning. So by 11:30, and I was watching because my subscribers and I, clients, we are short right now. We went short a couple different times yesterday. Some of us only at the very peak of the marketplace. And what we were looking for, I was looking for signals in the UK. I was looking for signals in the DAX. And what we saw yesterday at 11:30, what I knew was that the FTSE had failed at the top. And the top, folks, I'm talking about a swing point, which is this area right here, which is the or the September 1st time frame. You can see it was the high of this sideways move that we have. The low, we've had a couple different lows here. The first one was on August 9th when there was nothing but absolute fear in the marketplace. Market went ahead and turned around, pushed up, and then you came down and you tested it. You've come down several times. This is nothing more than a breathing pattern. If you were looking at an EKG of yourself, you would see something similar to this. This is simply the market breathing. Once you understand that, this can become second nature, just like it is in your pattern of breathing, if you will, and you can find ways in these markets to absolutely make money. And when you understand the money management piece of it, you understand the probability piece of it. In fact, I'm doing a free webinar a week from yesterday, so it's next Wednesday, 6:30 to 7:30. All you have to do, and this is going to be talking about probability management. It's going to be talking about position sizing, which is the most important aspect of your trading. It's new to most people. Most people do focus on a good entry point. That's important. But what you need, and some people, not everybody, focuses on a stop. I absolutely do that. But understanding what position size to have will have more impact on your trading success than anything else that you do. So it's a great hour to invest in your time. Just go to the front page of TFNN on the carousel up in the upper left. You'll see the webinar. You'll click on the button. You'll sign up for it. You'll get a email that'll come back to you. So it's a confirming email. Look for that. Sometimes those get into your junk mailbox. In fact, if you've already signed up for it, please go look in your junk mailbox. We've had a great first day. We kicked it off yesterday of sign-ups. We expect it to be very large because it doesn't matter whose system you trade. You don't have to be trading my system. You don't have to be trading any newsletter subscribers around here. We hope that you are, but you don't have to be. Maybe it's your own system. Well, I'll show you the tools that you need to work on your own system. But this applies to everybody, and so please join us. That's next Wednesday at 6:30 to 7:30. It'll be absolutely a great time. I promise to teach you something new and different there as well. When we talk about this consolidation period, and we're talking about understanding swing points and failures, what you can see yesterday, what the FTSE did was it went up and it got to a high of 54.58. Well, the top of the swing point on September the 1st was 54.49. We got above it yesterday, closed below it. I don't have the volume on my screen. Tom has the volume. It was lighter volume. It was a failure up there. And what a failure means is that you want it to go above the high of the swing point that it's testing, close below it on lighter volume. When you do that, what it's communicating to you is the market now wants to start moving down. Where will it move down to? Well, we can take a look at Fibonacci areas. It may move all the way down to the bottom. It may move down just simply to the top of the swing point from October the 4th, which this case here would be 5,075 versus where it was at 5,400. That would be, about an 8-9% move. The same thing is going on here in the U.S. If we take a look at the DAX here. The DAX was doing the same thing. Now, the DAX couldn't get all the way up to its high swing point. The DAX made a high swing point. The DAX is in real trouble. That's the German index, if you will. That's the primary index there. And if you take a look at the high, you're looking at 6106.11. The low is 6,008. and a penny. And yesterday, what did it do? Yesterday, what it did was it got up to the 6022 level and closed below it on lighter volume. And today it went up and tested it again and is coming down as well. Now, so what we have to watch, there's no certainty in trading. You have to the certainty is that you identify what it is that you're going to risk. And you figure most people, look, there are 6 basic human needs that each of us have. Certainty is one of them. And thank goodness that uncertainty, the other one, is also a human need of ours. Now, many people, their primary focus might be certainty, and that might be a reason why they don't trade the markets, because in their mind, they have to be certain that they're going to make money, because the majority of folks are afraid to death about investing in the markets because they might lose money. Well, or maybe they have lost money, and so that's their most experience. Imagine Cruz being up to bat, and his last experience was that he was 1 for 15. Your past doesn't have to equal your future, folks. It only does if you want it to. It's the same thing in trading. Maybe you had a bad experience with trading. Maybe you lost money, but the problem is that you may not have been taught, and you likely weren't taught, the rules of the money game. The money game is a set of rules that aren't handed out to you at birth. They're typically not passed down to you by your parents. They're absolutely not taught to you in school. And you won't find it on television as well. So the money game, and that is, in my opinion, the new industry that's out here. If you want to be able to take advantage of all the technology, whether it's these devices, whether it's your computer devices, changes. If you go back to just 5 years ago, if you can just think and go back to 5 years ago, maybe the phones that you were using, the computers that you were using, the tools that you were using for trading, and where it is today, folks, things move very rapidly. The next 3 to 5 years are going to move even faster. And if you don't take advantage of these tools out here, you will so be left behind. And there's no reason for you to do it, because we're here at TFNN absolutely to help you. We'll put this together for you. We'll help you make money. That I know that we can do that. And, just thanks for joining us. When we get back, we'll go to Gary in Colorado, John in Philly. Love you to get online as well. You can reach us at 877-927-6648. Don't forget, go to the homepage of TFNN. Sign up for our webcast next Wednesday. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618 88888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to thefrontoftfnn.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Don't forget, you can test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
877-927-6648. The markets are relatively flat right now. The ES Mini down 4. NASDAQ futures up a point. And let's go to our man, Gary in Colorado. Gary, thanks for holding. Thanks for calling.
Good morning, Steve. How are you this morning?
Doing great. Doing great. You're up nice and early.
Beautiful morning here.
Oh, good. That's good. That's good. Now, are you a football fan?
A bit, yep.
A bit. So, you know...
You're going to ask me about the quarterback, right?
I was going to.
Yeah. Oh, we're happy here. I think it's a good move.
Yeah. We'll see. We're talking about Tim Tebow, folks, who's, was a great quarterback at University of Florida. And so we'll, good soul, good kid. And we'll see how he does. We'll see how, I wish him the best. So, Colorado Springs, that's a beautiful place.
Oh, man, it's fall. The leaves are coming down.
Yeah. I love hanging out at the Broadmoor up there. Oh, my goodness, it's a great place.
Yeah.
Now, you want to... Go ahead.
I was looking at I was listening to you guys, you and Tom, last night.
Yeah.
On that call on the NQ.
Yes.
About it being Gartley.
Yes.
On the 15-minute.
Right, okay.
And I started looking at that, and then looking at the overnight, and I see we halted right at the 786, and basically have been hanging around it all.
Right.
All night.
Yeah, and what happens with these? Obviously, what happens with these markets, folks, and what Gary's talking about is. There are patterns. When you're taking a look at charts, first let's say if you're trading, if you were a day trader and you were going to be making a trade based on a 5-minute, 10-minute to 15-minute chart, you want to stay within that chart for that trade. Now, what Tom and I were also really taking a look at more so is during this consolidation period, the swing points have been providing us such great information that they have provided just better longer-term trades as well. The intraday time frame, is really the breathing pattern, if you will. Now, you want to pay attention to them, certainly, because you want to see when those patterns are out there and you want to see if they're responding the way that they are. You mostly want to be taking a look at the bars. So on the 15-minute chart that I've got up on my screen, what I want you to, are you watching this on Tiger TV?
You bet. Well, actually, I'm watching it in the dim.
Okay, all right. So, the first thing is that you can see that the down moves that we've had have all been, what I'll call wider range bars on the 15-minute NASDAQ E-mini contract. You've got one here that was at 4 o'clock last night at the close. You had another one this morning at 4:15, and you can see, so you really no activity along the side here in the middle between the close, and you certainly had an up bar at 3:30 in the morning, and then we came down. So the bars on the downside. Now where it's coming into is all the way over here in this 4 o'clock time frame on October the 12th. So you would expect this also to act as as an area of resistance. But if you were taking a look at really the ABC pattern that maybe this, made, you'd really come down now to about the how I've drawn it here with this formation tool. The high that we made at 3 o'clock in the afternoon on the 12th, the low that it made on 2:15 in the morning last night. Then it came up, in this case here, to the 4 o'clock time frame. Now, what you'd also want to do is you'd really want to take a look at the retracement area from that high to low, from that A to B. And what you're going to find out is it's just a little bit above a 0.382. So what this is also suggesting, if that area holds, that this is going to likely form more than a 1-to-1 A to B equals C to D on this shorter-term chart. And the reason is because when you retrace, and you only retrace back to a 0.382, it tells you the move in the direction that you're going in is powerful, is more powerful. And so what you typically would do is you would do more than a 1-to-1. You do a 1 to 1.272, maybe a 1 to 1.618, or somewhere, in that range, which would then take, in this case here, take it from 22.95 that we're at right now down to about 22.63, 22.68 in that type of a range, in order to complete that ABC pattern. And, it's got to get through this area here at 3:45, at 10:12. That's really the next swing point that it's got to conquer. And, it's not going to, I don't know that it's going to be just a quick rug pull, if you will. There's definitely been some buying on the way up, and you're going to have to break through that. But the volume will tell us where it's going. And so that's the ABC pattern that I'm looking at there. Is that helpful to you?
I was looking, the thing that I was going to point out is basically where your arrow is there. All of Tuesday is massive volume the whole day.
Yes, so. Yeah. Well, Gary, hey, thanks for calling. I appreciate it. Folks, give us a call, 877-927-6648. We'll be right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. Thanks so much for joining us. We got a great date lined up for you. After this show, you've got Tom and myself doing the Money Masters, and I'll be back with you for one more hour from 11 to 12. Following me, we got Larry Pesavento, who will hit it out of the park, and then 3 to 4, Ken Shreve, and Tom will be back from 4 to 6. We're off to the races. The Dow is in the lead, down 71 points right now. The S&P's down 8, Composite down 5, Small Caps down 4, NDX 100 down $1. $1.51. And let's go to John in Philly. John, thanks so much for calling.
Hello, Steve. Good morning to you.
Good morning to you. Good morning.
Hey, Steve, I wanted to ask if you would pull up either your intraday SPY or E-mini chart, the one that you prefer to work with most.
I've got the SPY up. What is it that you wanted to look at? You wanted to look at what time frame?
How about something intraday, whether it be your 10-minute or your 60-minute chart, be great.
All right, so let's see here. I've got a 5-minute, but we'll just turn that to a 10-minute for you. Okay, go right ahead.
By the way, I have to compliment you on your weaving together probabilities, money management, and position size ideas.
Thank you.
Just to let you know, it took me years and years.
Yes.
To learn all that and put it together.
Yes.
And you're doing that for people who are looking for those answers. It's a great idea, so
well, thank you very much.
To you.
Thank you very much. I appreciate that. Yeah, it's a great way to put it all together, and it's a great way to be able to take your money and actually put it to work and have control. And there's no better feeling than being able to do that.
Steve, I've got 2 questions. You and Tommy picked off a nice trade yesterday, shorting,
yes,
be it the NDX or the SPYs. And I have 2 questions. One, what do you have starting off with this trade shorting up near SPX 1220? What is your target looking to take profits, sort of thing? That's the first question.
Well, the target really now is at the bottom of the range. So I'll go back to the daily chart on the SPYs, and on the SPYs here, give me a second for this to pull up. It's really the first area that we're looking at is going to be as it gets down to that swing point on October 4th. And
Gotcha.
the high there is 112.58. Now, along the way, people are going to go ahead and get off the train. We'll see what happens when we get to the 0.382 area. Now, this is assuming that the market continues to move down. There's no certainty. There's no guarantees here. But the next stop on the SPY is really the 116.52 on a daily chart, if you will. And then 113.05 happens to be the 0.618. Well, the cool thing about that's a normal retracement there. Nothing wrong. And we'll see what the volume is coming into that area. The volume is light. What it will do is the top of that swing point from October 4th is 112.58. So it's just right above or right below the 0.618 retracement. If we're coming in there with real light volume, the volume down there is 458 million shares on the 4th. If we're coming down there with half that volume, what we'll do is we'll look for long entries, take our profits and look for some other signal. But, we'll dig under the covers and see what's going on with regard to maybe some of the larger sectors within the SPYs. The SPY's got 9 different sectors. So when you're trading the SPY, you want to really go take a look at, what's going on inside the sectors. You want to take a look at, I would think the SPYs, I think it's maybe like the top 30 stocks might represent a significantly high percentage of the actual SPYs. So you can do that. In the Qs, it's so much easier because, top 10 stocks represent 53, 54% of the entire index. So I can go around the world in the Qs in, as far as what direction they're going, just by taking a look at those 10 stocks, and I can do that in 4 or 5 minutes, if you will. So that's what I would look at, John, and those are our targets, and thanks for the compliments. Appreciate it very much. Folks, the Dow is down 76, and I look forward to speaking to you again, John.
Thanks, Steve.
Have a great day. 877-927-6648. Folks, we'll be back in just a few.
Yeah, it's always better when we're together.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. But you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by South American Silver Corporation. For more information, just click the South American Silver Corporation banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. We got the Dow down 87, 89. The S&P's down 10. The composite down 9. Small caps down 6. And the NDX 100 down 5. Now, what I've got on my screen here is the Apple chart. So I want to, use this time here, and you give us a call. Happy to talk to you, absolutely. And, wanted to go ahead and take a look at a couple of lessons, if we will. So we're looking at the Apple chart. Let's take a look at what Apple was communicating to us yesterday. First, what I want you to take a look at is this area here where I've got my cursor is an open window or an open gap, if you will. Apple gapped down from the September 21st time frame to the September 22nd time frame. And what a gap, folks, is Apple, the low of Apple on the 21st was $412 even. The high the following day was $409.82. So that price difference is what we refer to as a gap. I like to refer to it as a open window because visually people can understand an open window, and often, most times, those gaps will get filled. In Apple's case, I think that it will get filled eventually. But you want to pay attention to those gaps because when you open up a window like that, when you gap up or gap down, those should be areas, if you come up to it and you can't fill it at that point in time, that's telling you that the strength of the move is still in that direction, whether it gapped up or it gapped down. In Apple's case yesterday, and they were on that day when it gapped down 34 million shares, it came back and tried to test it 3 trading sessions later on September 27th. Tried to get up there on 22 million. Again, that was going against 34 million. What did we have yesterday? Yesterday, it tried again, but it tried with that same 22 million, if you will. Now, it got over the 22 million from September 27, but it was really going into the gap. Couldn't even get up to that high of 409.82. It only got up to 409.25, and then it failed. And so as John was calling from Philadelphia, that's why it's also helpful to go intraday and take a look at what's going on candle-wise. But that's telling us that that gap area is strong. And when you then take a look at the chart, you want to say, well, what's on the bottom side of a chart? In this case here in Apple, what you're looking at is a high volume low on October 4th. This area right here. Now, this area needs to get tested. High volume lows will get tested. So when you failed up at the top, this is sending out a big, huge signal to us that it wants to go down and test that bottom area. It's just the breathing pattern, in any kind of stock chart. Now, we'll see what happens when Apple gets down to this area here. If it gets inside the high of 381.80, whether it's on lighter volume, first, if it's coming into that area with more than 44 million shares, that's telling you that Apple wants to go down to the bottom of that candle and likely much further. Now, the bottom of that candle, it's a pretty good range. The bottom of that area is 354. The high is 381. So you're looking at, just about $27 wide range for that day. So pretty big, but you want to pay attention to Apple if it continues this move down and moves down to that area, how that is coming in with volume, because Apple's a big, huge weighting in the Nasdaq, in the Qs, I should say, and the NDX 100, and so you want to pay attention because the thing is with regard to market turns, when you have indexes such as the Qs, and I'll switch over to the Qs here real quickly. The Qs were the strongest index. Let's say still are because of how they've retraced back from their highs. And in this case here, the Qs, and I'm going to show you this to you in just a moment, the Qs on this last move up have shown us that for something that was so strong, the price on the way up wasn't real. Because if you take a look at this red line that I've got here, which really from this bottom candle on the Qs, which is that same day, that October 4th time frame, you can see how price moved up, but volume was moving down. That, folks, is a huge sign that you have got to look out below, because that is not how real supply and demand works. You know that for anything that you've ever bought in your life. If you saw something that you wanted and everybody else wanted it, you know you paid more. I don't care whether it was Beanie Babies at one point or whatever the rage might have been, anything in your life that, you really wanted and there was not enough of supply, you paid more, and you were willing to pay more for it. It might have been an iPhone, it might have been an iPod, it might have been a computer, whatever it might have been, you're willing to pay more. It doesn't happen that way in trading. That's not sustainable. So when we take a look at the cues, and where I'm going with this, and why you want to be paying attention, you want to watch what's going on, because when you have something like this, something that was so strong and leading things up could also be the strength that would lead things on the way down. And when you have a volume pattern like this, you really have to be aware of following that. So I want you to do that. I'm also going to go ahead and, let's go over to the New York Stock Exchange. I like that chart. You should really pay attention to that chart because it simply has, more stocks that are traded in here. It gives you a better breadth of the market, if you will, the overall market. And you can see I've got a number of candles that I've got labeled there called bearish engulfings. And what a bearish engulfing is, I'll just blow this up here for a minute. We'll take a look at this one right here, which is from the May 6, 2011 highs. And this is a weekly chart. So a weekly candle pattern has got even more value, if you will, because it's a longer-term picture of what's going on in the marketplace. And so I want you to be aware of these candles. I want to be able to teach this to you because, when you can see this, it will help you to understand the patterns that exist. When I opened the show, we talked about the pattern of Cruz on the Texas team and how his pattern was changed. I want to be able to change your pattern. If your pattern is you are scared as can be to invest your money, then your pattern is to come on over, sign up for my newsletter, 30 days, unconditional money-back guarantee. I'll show you how to make money. I will teach you how I will help you change your pattern with regard to making money. Absolutely. And I will teach you about this so that you can also do it on your own. Now, this candle right here, where this red candle, if you will, engulfs the entire body of the session before. This is a weekly candle. It's called a bearish engulfing. When you see that, the reason why it's called bearish, now bearish, some people don't know the difference between a bull and a bear with regard to a market, or long or short. Well, bull, the reason why, and it's an indication that the market is going longer because of the bull horns, if you will. A bear, because, it drinks a lot of beer like I do. So it's got a bear gut, if you will. And so, bearish, when we talk about bearish, we're talking about the market moving down. Now, if you had known the pattern of the NYSE chart, you could have gone back and you could have looked at the highs going back to October 26, 2007. The high of the NYSE took place the week before. It got up to 10,387.17. The following week, the following session, it created a bearish engulfing. That bearish engulfing took us all the way down, if you will, to the March lows in 2009. Well, there's also this hammer candle, which I've pointed out to you before in the past. What happens here from March 9 goes all the way up into this April of 2010 area. You have another bearish engulfing. What's the market do? It retraces down. You've got this bearish engulfing up here at the top in May. It moves down. So I wanted to be able to teach you 877-927-6648. We'll be right back, folks.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before October 31st from your local Barnes & Noble store. And you will be given access to not just one, but two exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses, keep money in your community, and get a great education. But be sure to act now, because you only have until October 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York Stock Exchanges under the symbol GBG.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. Thanks so much for joining us, and really appreciate that. Right now, you got the Dow down 100. You got the S&Ps down 12, Composite 8, Small Caps 8, and the NDX 100 hanging in there, just down 2 points at this moment. And one last thing on the NYSE chart. Now, this is the weekly chart that we're looking at. And, you know, I talk about these Fibonacci retracement areas. And for those of you that are new to that, Fibonacci is a ruler, if you will, of retracements or expansions that we use. And we use that to measure the distance between swing points. Well, in this case here, if we're taking a look at the NYSE, what we're doing, folks, so we're going back to this. The swing point here is this high from September, the week of September 2nd. The high out there was about 75.87. And the next time that we had a real swing point where there was a definition was last week, the October the 7th. The low down there was 64.14. Well, if we take our Fibonacci retracement tool and we measure the distance between that, there's really 3 numbers that we look at: 382, 618, and 786. And in this case here, when you get to that point 786, first that 618 is an area where you will let passengers off of the elevator. I look at these as being elevators on the way up and on the way down. And that point 786 is a real natural area for many people to take profits. In this case here, the point 786 measurement on the NYSE is 73.3622. Where did it get to this week? 73.37, folks. And so I want to be able to show you these patterns that are out there. Why they work, I don't know. I just know that they do work. I want to be able to teach you how to draw them. I want to be able to teach you how to interpret them. I want to be able to teach you how you put your money to work so that you can start really making that work for you, because we've all got, dreams, bills, whatever it is that you've got to do. And the easiest way, look, we all work so hard, and I'll help you to protect that. But I want to be able to help you to also take that and make that grow. No matter what age you are, you want to be able to do that. And so what I also want to do is I want to, quickly take a look at the dollar index, because right now we've got the dollar index up 42 cents. If you caught the show that Tom and I did yesterday when we were taking a look at that dollar index, and here's some retracements that I'm looking at. The retracement on the dollar index that we're looking at is going back to the low from May the 4th. That's when we made our highs on May the 2nd, if you will, in the markets, all the way up to the high that the dollar had at $80.43. That was done on October 4th. So we take that same ruler, that same retracement ruler now, and now we're measuring on the way down. And the dollar index yesterday got down into the low that it actually got to was 77.11. Let's see, this morning did it get down a little bit further, 77.10. And the 0.382 of that area, folks, is 77.54. Now, that's an area where you would see people typically get off. That's one of those retracement areas. But this also, just like our first caller, Gary in Colorado, if the only retracement that this dollar index does is right to this area, this 0.382 area, what this is telling us, this has a very strong leg move up. In fact, on the dollar index, this would go ahead and this would take us up into the range of about $83.96. That would just be the 1-to-1 ABC, and there's every likelihood that it would do more than a 1-to-1 ABC, because those 382s, just like when we were talking with Gary about the NQ, Gary from Colorado Springs this morning, if you only do a 0.382 and you move out of there, folks, that's telling you that. Now, why is that important to you? Because if that's the case, as the dollar moves up, your assets, your stocks, your commodities are going to fall in price for the most part, because everything is measured in dollars, and that's just simply the correlation that is existing right now in the marketplace. And it doesn't always work that way. It doesn't always exist, but right now it absolutely does. So I want you to pay attention to that. I want to make sure you've got stops in if you're trading. And I absolutely, if you're in your 401k accounts, you've got to be very, very careful out there, folks. Look, folks, sorry about this. Got a little technical difficulty here. I was wondering why it sounded so hollow, if you will. But so anyways, welcome back. I don't know what you heard. But, look, thank you so much for joining us. And what I'd love you to be able to do is watch this show live on TigerTV. You get to see a little bit of everything. You get to see when it works and when it doesn't work. And in this case here, you're going to be able to follow along with with what I've got up on my screen. And, I want you to call in, if you would, 877-927-6648. I was saying that I know that everybody has a little bit of anxiety about, and maybe a number of different things in life, but certainly calling into a radio talk show like this here. And there's nothing better in life than to actually do something each day that makes you a little bit uncomfortable. Because what happens is it just helps you to expand your universe. It helps you to be able to, get over a little bit of a hurdle. And when you do that, you're exercising those muscles, those mind muscles. And, so pick up the phone, give me a call if you'd like. We can take a look at a stock that either maybe you own, maybe you're thinking of buying, and we can take a look at a price point that might make sense or a pattern that's out there. And, and I am a moon lover. I love that opening that we've got. There's a number of aspects about that opening, and they're all there to be able to create triggers. They're triggers inside me so that I can be outstanding when I am here delivering a show to you, because they are able to put me into a peak state of mind, if you will. And the one of those elements is certainly being able to go back to the U.S. hockey team. Now, I've got up on my screen here kind of a quote, if you will, that I've changed around from what Herb Brooks told his team before he sent his team out there. And that is, and it's all really about mastering money. Now, I trade a number of different strategies. One is a lunar trading strategy. It was the reason that we went short yesterday when the market was up about 200 points. And I really want you to understand this. I provided that strategy. I did a webcast. In fact, it's probably still on. It's probably still on Channel 5. You can probably dig down far enough. It was back down in July, and it showed you an aspect of the lunar trading strategy. An easy way to do it is just simply you can subscribe to my newsletter service for 30 days, unconditional money-back guarantee, and you can actually see it. You can follow along. You can actually trade with us. You can make money. And then what's really great is to have raving fan customers. I absolutely work hard for folks. I learned a long time ago, even when I owned my own businesses, that most people will work harder for others than they will for themselves. So if you own your own business, and I've owned many, what I do is I don't picture myself as being the boss and kicking my legs up. I can't remember how often, I ever did that in life. Not that I don't relax or what have you, but the reality is it wasn't like I'm king and you're not. It was just the opposite way around. We would flip the pyramid. And what I did was, in owning companies, if you will, my mindset was to work harder for others. So that would be whether it be customers, whether it be staff, whatever it might be, folks. And so, I want you to be able to do that. I want you to be able to, in the money game, if you're not achieving what it is that you're doing in the money game, then maybe you just need to make just that little shift with regard to who are you playing this game for. Maybe if you showed up each day for work, whatever markets it is that you were trading, you were actually focused on working harder for others. Maybe it's your kids, maybe it's a spouse, maybe it's a parent, whatever it is. And what you should do is, even if you've got that thought process, look, thoughts, folks, you need to really visualize. So figure out who it is that you are really working hard for. Take those pictures, tape them to your screen. If it's yourself, no problem. Take a picture of yourself in your favorite spot, where it is that you want to get to. Maybe it's a place you haven't been to, and tape that to the screen, because when you've got those visualizations, folks, you will move towards those. And what I know is, I know you were meant to be a money master. I know that if you are you haven't achieved what it is that you want, it's just a matter of learning some of the tools that we've got. In fact, I'm going to be sharing another set of tools next Wednesday. If you go to the homepage of TFNN, you'll see in two different places. On the carousel on the left, it's the first item, and you'll also see on breaking news, it is the second item. It says position sizing by Steve Rhodes. I'd really love you to attend. You click on that button, you'll put in some information. There'll be another email that comes to you. All you have to do is respond to that one, and boom, you're into the seminar. So let's go to Travis, who was on hold. Or was actually speaking with Tom and I before we were in our last break, and that was Travis from St. Louis. We were talking a little about baseball, and Travis, I'm hoping here for a St. Louis Detroit. When was that? 1960? Was that 68 when those two teams were back playing in the World Series?
Well, I went in 2006 and watched the Cardinals win it here in St. Louis.
Oh, did you?
They played since '68.
Yeah. Hey, so I've been to now in St. Louis. Are they still playing in the original stadium, or did they?
Oh no.
So they
have a new stadium since 2006. They won the World Series the first year in their new stadium.
Okay, cool. What did they do with the old stadium? Is that still up, or are they?
No, they knocked it down. It's in the same place basically. They moved it north about 300 yards or something, and covered basically half of the old stadium with a new one.
Yeah, St. Louis, it's a great town. Absolutely, I love. My sister lives there. My parents, when they were alive, they lived there, and great golf. I love the golf courses in the greater St. Louis area. Now, you had called. You were asking about Amazon, right? So I'm going to go. Let me go ahead and get over to Amazon here. Now, we're going to take a look at Amazon, folks. The symbol on that is AMZN, and right now it's trading at $237.79. Now, when I'm taking a look at Amazon, Travis, it's inside that September 19 swing point, which had 8.2 million shares. You came into it three trading sessions ago with 5 million shares. Yesterday, you were up with 6.5 million shares. It actually looks like Amazon wants to go test the high out there of 244. And before it really gives you a signal. Now, if it tests the high of that 244 area on less than 8.2 million shares, then we'd have a failure of a swing point on price and volume. So you're kind of in the middle, if you will, and also then what you've got right now, what it's doing, you can see that it's tested it yesterday, is you've got a high volume bar on September 28th. You had 14 million shares. The high on that was 235.81. Yesterday you came down and tested that. You got down to 234. It rejected that, moved a little bit higher. Today it got down to 235.51, which is also below that area, and so far it's rejected that. So it just seems to be signaling, at least on the daily chart, that it's got some work left to do. It wants to go up to test that the high of that swing point. If I just simply dial down here to maybe a 10-minute chart. Let's see if we see anything else that might pop out as. And what I see on the 10-minute chart is the open from 9:40 a.m. yesterday, and the high on that is 237.54. And you had 527,000 shares. You can see how it came down. If you're watching on TigerTV, it came down yesterday, and when it was coming down, it was on 198,000 shares, 200,000 shares. So it didn't have enough volume to push it down. Even on the biggest downdraft going into the close, if you will, only 180,000 shares, coming down. And then this morning, you had it, let's see here, at 9:40, you had 345,000 shares. So there's not enough volume right now to break down through there. Is that what you're looking at, or?
Well, I sold a bear call spread, the 240-245 for October expiration, which is next Friday.
Okay.
And took in some premium, and I was possibly looking at trying to put a strangle on this thing if we got some sort of a short-term pullback, maybe into Monday or something.
Yeah.
To where I could be long the calls and puts, and just looking for a high volatility type of a move out of the stock over the next 5 or so trading days next week, and then see if, one of the, not really going directionally on it at all, just being long both the call and the put, Yeah.
And
just seeing if we can get a big move going. And, we had Apple earnings on Monday, so there could be some high volatility with Amazon as well, is what I'm thinking. So
there can, but, right now, what you're looking for is, you want to see a break of that swing point either way. You'd like to see a break below the 232.88 area. That's that September 19th swing point. But it's trading inside there. The longer that it trades inside there, and even when we dial down intraday, it's just telling us that it first wants to get up to 244. It's not that much more of a move. You're just looking at,
not at all.
Yeah, but you'd love to see it get up there and fail. And then that would, that would give you the juice for it to move down. But when you're going to get, you've got a little bit of support here, in this 235 area.
Sure.
Okay.
Okay, man.
Hey, thank you so much. Thanks so much for calling, and thanks for holding on. I really, really appreciate it. Let's go to AJ in Denver. AJ, thanks for calling.
Good morning, Steve.
How are you?
I'm doing fine.
Oh, good.
I wanted to ask you, Steve, I jumped into TZA this morning, and I just wondered where you think this thing is going.
It's going to the moon, baby.
I hope so, Steve.
I do. Well, I tell you, where I think that TZA is going to, now the easier thing is to really take a look at the IWM. So I'm going to just switch over to the IWM here for a minute. Let me find that ETF. And then we'll switch back to the TZA for you. But you really want to watch what's going on with the IWM. It's traded longer. It's going to give you better information. And so if we take a real quick look at the IWM, and the IWM has been the weakest of all of the indexes out there. And, so right now you're off of the top. Yesterday you came into the swing point from September 27th that had 93 million shares. You got into it yesterday with 88 million shares. And where the IWM wants to trade to, and if you stick on through the call, we'll finish this up. This wants to at least get down to the 64.88 area, possibly as low as 60.09. But do me a favor, AJ, stay on, and we'll come back. We'll take a look at TZA. And, folks, you can get in on the action as well, 877-927-6648, and we'll be right back.
Okay.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before October 31st from your local Barnes & Noble store. And you will be given access to not just one, but 2 exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you only have until October 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details. TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the fourth quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG. X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Absolutely is, folks. Welcome back. 877-927-6648. We got the Dow down 114, S&P's down 14, Composite down 10, small caps down 1195. We were talking about the small caps with AJ in Denver, and so we're taking a look at the IWM. And by the way, AJ, great trade jumping in on the TZA. It is absolutely the weakest indice out there right now, and I think it's a good trade. You want to make sure you've got a stop above yesterday's high, though. So I don't know, we didn't talk about your stop, but please make sure that it's somewhere above yesterday's high. And as soon as you see the IWM get down below the September 27th low, that's 67.27, then you're going to have some nice juice, if you will, in the move. It's going to at least come down and test the high of the October 4th bar. Now, the October 4th bar there's got 165 million shares. When you get into it, and what I want you to take a look at, AJ, is in the way down, the IWM is in essence going to be the leader that's going to be providing us with information as to how low this market might go during this move, assuming that it continues on a downward trend. And so it'll be the first one. It likely will be the first one down there to give us some information. Might be a day ahead of the NDX. Might be a day ahead of the SPYs. So if the IWM gets into the top of that bar at 64.88, even if it's on lighter volume, what will be nice is I think that this wants to go down and test 60.09. So if we go switch back over to the TZA, give me one moment here just to do that, just to kind of give you a feel for on the TZA where this thing might go. And what I'm going to ask you to do is probably ask you to, at certain stages you want to go ahead and start moving your stop up just to protect, some of your profits, okay? And on the TZA, if the IWM goes to test the low of that bar that we were talking about, the TZA could get up into the 63.90 area. Are you there, AJ?
My seatbelt.
Huh? Fasten your seatbelt. Yeah. Now, where the first piece of real information, assuming the market, continues to pull back here, which I suspect it will, the first piece of information that you're looking at is right around 49.28. You're in at 40.31 right now. If you jump in early this morning, you're already up, $1 or so. And, and so on the TZA, you want to have your stop somewhere below the 37.45 area. Because anything can happen in these markets. And, you're in what looks like a good trade. You've got, so far today, we've been trading for 2 hours, just about 2 hours, 13 million shares. Looks to me like, this thing will probably do about 40 million shares or so for the day, and you're in a good trade. Does that help you?
It helps me a whole lot, Steve. Thank you very much.
Okay.
I'm thinking about taking your newsletter. If I make some money on this trade, I'll take your newsletter.
Oh, hey, look, and even if you don't, you should take it. You got it for 30 days, unconditional. Money back guarantee, and I'll teach you a bunch, and what will really be helpful. You should also go over to the homepage of TFNN and sign up for the free webinar that I'm doing next Wednesday. It'll be also helpful to you. But thanks for calling, and I look forward to our journey together. All right, AJ?
Thanks.
Okay,
Thanks,
you bet.
Steve.
You bet. Have a great day. All right, folks, so we've got the Dow down 113, and let's take a quick tour around the world. We've got the Europe that is closing here in about 3 minutes, so let's take a look at what we've got going on over there. We'll look at the DAX, and we'll look at the FTSE. So we've got the DAX up first. You can see it's trading right now at 59.01, and I don't have the volume on this, but what the DAX did yesterday and it did today was it tested that swing point. We really want to be able to teach you about swing points because it's so helpful in your trading. It's been so helpful during this consolidation process. The DAX was testing the swing point low. It never got above the, never was able to get into the actual swing point other than test it intraday, and it was testing the low there of 6,008. Tested it yesterday, tested it this morning, and I suspect that where the DAX wants to get down to is right at about the 5,052 area, if not lower. And if we take a look at the FTSE, let's see where the FTSE is trading right now. The FTSE is down. FTSE's down 52 points, and on the FTSE, what we're looking at is you can see the FTSE did the same thing. Its swing point was a different day. Its swing point was September 1st. You can see how it tested it yesterday, tested it today as well. And so that is on its way down probably to the 5,075, maybe as low as 48.68 in this area. Could even push as low as the 47.91. Now, there's some real significant lunar aspects that are going on. There was a big transit date on Wednesday that kind of connected with what we've got here, folks. I certainly want you to protect yourself. If you're long and you're strong, just make sure you've got stops in place. This market doesn't have to do what I am thinking it's going to do right now, but I want you to make sure that you've got stops in place on any of your long positions so you can protect your profits. We'll be right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, more than 40 different mining equities, as well as some of the most popular precious metal ETFs, including the GDX and the SLV. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report that will help you take advantage of investment opportunities at the current historic gold price levels. To order your Gold Report today with a free 30-day trial subscription, log on to tfnn.com or call our office directly at 877-518-9190.
Are your cable rates rising? Tired of being pushed around by your provider? It's time to push back. Cut the cable and get Dish Network installed with absolutely no equipment to buy. Here's the best part. Packages start at just $24.99 a month for an entire year. That's right. Call now and get Dish Network installed free. Plus your choice of HBO, Cinemax, or Stars free for 3 months. If you call in right now, Dish Network will also throw in free HD for life. PMG Dish, a Dish Network authorized retailer, is waiting for your call and can have you watching TV as soon as tomorrow. Call 800-565-8010. Imagine all your favorite movies, sports, and shows in crystal clear digital quality for far less money, and you won't have to deal with the cable company anymore. At only $24.99 per month, they're practically giving it away. Call now for full details. Call 800-565-8010. That's 800-565-8010. Again, 800-565-8010. Limited time offer, prices, packages, and programming subject to change without notice. 24-month agreement required. Cancellation fees, auto pay, and paperless billing and other restrictions apply. Call for details.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. You got the Dow down 98, S&P's 12, small caps down 10. Let's go to Bill in Orlando. Bill, thanks for calling. Thanks for holding.
Hey, how you doing, Steve?
Doing great. Doing great. You wanted to take a look at the FAS?
I sure do.
Okay. Are you in it? Looking to get in it?
No, I got in the FAZ yesterday.
Okay, good.
I got in that at 50.59. It jumped before I could get in. But what I'm interested in, what do you see on this FAS? Do you see it coming back to like 1041 or as far down as 857?
Well, here's the first thing when you take a look at the FAS, folks, and that is a 3-time direction share long position on the I think it's the Russell 1000 financial, right? Russell 1000 or Russell 2000 financials. And so the first thing that you want to take a look at on the FAS number, now everybody, we're going back to that August 9th day, because that August 9th day when we take a look at, many stocks, many ETFs, such as the FAS, it's a real important day. Now, in this case here in the FAS, the high of that day was 1520, the low was 872. And we did volume there. We had, 103 million shares. Now, you can see that as far as this consolidation period going sideways, every time the FAS has tried to get up towards that top of that bar, the top of that swing point, if you will, it has failed. There's not enough volume there to push it over. Now, the low side of that range is at 872, and at 103 million. That was tested on October the 4th, and it was tested with 107 million. That got tested with more volume. That tells you that in this trade here, Bill, that low needs to be tested. If I didn't know what it was, and I would just take a look at any chart, it absolutely would tell me that low has to be tested. Now, you got confirmation of that yesterday when it was going into the most recent swing point, which happened to be September 27th. It got the high on that swing point was 1275, about 82 million shares. Yesterday, you get above that on 79 million shares, still lighter volume, not substantially lighter volume, but it rejected that area, and now it's moving lower. So, which is what got you into the FAZ, so I'm glad to hear that you're in the FAZ. I do see the FAS coming back and at least testing that high of 1030. That's now the volume bar. That's now the swing point that really needs to be tested. If you come into there with volume, or it's picking up volume on the way down, and you close inside there, what it really wants to do, just as it tested the high of that high volume bar on August 9th, I believe that the low would want to be tested. So that's that 843 area, on the FAS. And the other thing was you're taking a look at just simply during this consolidation period. It is making lower highs all the way down, and it is making lower lows as well. So, the financials are in just simply a heap of mess out there.
They are.
So be careful on these, because these obviously move very quickly. What you've got helping you today, I'm sure, is J.P. Morgan trading down. But be careful as this thing gets into that high there of 1030. Another $1.30 from where you're at right now.
So take a look there and then see what we have on volume, and then we.
Yeah, because if it's really lightening up there, then it's a good place to go ahead and take profits and then wait for another entry point, wait for some other signal. But this range is so narrow, on the financials here. And
but these are textbook swings. They're just so easy to read.
They are. There's a lot of during this consolidation period. It has really been wonderful to understand price and volume and swing points. And it's why folks really should have the art of timing the trade. And the best thing to do would be to go to your local bookstore, order it, because we've got the special running through the end of the month where you get access to some really valuable lessons just through some webinars that come with it. So, Bill, thanks for calling. I appreciate it. Have yourself a great day. Folks, we get back, we'll go, I don't know what we'll look at, but no callers on the line, so you can get in on the action. 877-927-6648.
Yeah, it's always better when we're together.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the markets and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to
Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by South American Silver Corporation. For more information, just click the South American Silver Corporation banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. Thanks so much for joining me, and I want you to stick around because, you know, it's a great lineup that we've got here for you on Thursdays. We've got Larry Pesavento, who's going to be doing the Futures Hour. He comes up next from 12 to 1. Then we go to Ken Shreve from 3 to 4, breakout investing, and then Tom from 4 to 6 to take it home. So thanks so much for joining us. Let's go to Jerry in Longwood. Jerry, thanks for calling.
Hi, Steve.
How are you today?
I'm good. And you?
I'm doing well. Good to hear. Good to hear from you.
Yeah, I was at your Saturday seminar that you guys did. That was great.
Thank you very much for attending. We had a blast.
Yeah, I got a ounce of silver, so I was doing good.
Oh, isn't that great? Isn't that great how that worked out? You know what's actually really cool, folks, is that I talk about how you manifest things into your life, and what Jerry's talking about is at the end of the workshop, we gave out some silver. Now, the reason I want to tell this story is that one of the attendees had sent me an email the night before because there was an email that went out and let folks know just a little bit about what was going to happen. I don't know if it went out the day before or 2 days before, but he sent me an email, and in the email, right up front was the fact that he wanted to win, a 1 ounce silver coin. He was the first one that was drawn. When we drew that, and he was the one that said to Tom, also, he wanted to win an ounce of silver. So absolutely, he envisioned it, 2 days before that when he sent me the email, because I didn't get an email from anybody else saying I want to win 1 ounce of silver. But I am glad, Jerry, that you were there, and glad that you left with an ounce of silver and maybe some other ideas as well.
What I wanted to ask you, I've subscribed to your newsletter. I'm trying it out.
Yes, thank you.
And I did one of your seminars, but I don't have it all put together. I wanted to ask you about the difference when you say your stop multiplication factor. If you use 1-to-1, for example, is that 1% of your 1-to-1? Is that 1% of your entry price for your stop, and then the hard stop would be where you would, if you get jumped, you would just bail if it went below that?
Yeah, so what Jerry's talking about is, and I'll be sharing that with everybody next Wednesday on the free webinar that we're doing that you can sign up for on the homepage. And what I've done is I've created a tool that is a money management tool, and part of that, Jerry. So just to help you out, as you know, when you input the symbol into the tool, what it does is not only does it pull up some information about the stock or the ETF, but down at the very bottom of it, it gives you the last 10 days average true range from high to low, and it accounts for any gaps or what have you. And if it says GU, it's for gap up, or GD, it's for gap down. And you'll see that along the right-hand side. And what the system automatically does is it automatically defaults to a factor where you would multiply what your average true range is. And right now, as you know, it automatically defaults to 2.7. Okay? And what this is calculating is a volatility stop. So when I send out a email alert or a newsletter update and it tells you to use 1.1 as the factor, all it's doing is taking that average true range and multiplying it times 1.1. And then from the entry price, what that's doing is that's going ahead and either adding to or subtracting from, depending on whether you're going long or short, where you should actually place your hard stop. And yes, if that stop gets broken, even if it is jumped overnight, unless I've sent out an alert to have you move your stops, and we just simply close out the transaction.
Yeah, I wasn't sure because I had listened to you talk about the previous caller, and you told him to put a stop in on the TZA. It seemed to me like it was about 35 cents under what he would have entered at.
Well, I didn't give him the exact price. I just simply wanted to make sure they had a stop and just simply go ahead and make sure he had a stop underneath something. In our case, the money management strategy that we have in place, the reason why I like to use a volatility stop is one, I don't like to do all of the work in trying to enter a trade, especially one where, in this case here, I believe we're in a trade that's going to last through the 20th of this month, if not the 26th. And we'll see how all that works out. But what I don't like to do is all the work that we've put into it, and to find, because I don't know, like yesterday, we didn't know exactly where the market would stop and where we ought to go short. It was taking a look at a number of different things, and just before and during the webcast, is where we simply drew our line in the sand, if you will. And what I don't want to do is I don't want to do all that work, think I know exactly where a stock is going to stop, if you will, because what I want to do is I want to stay outside that daily volatility. So I typically will not, and because you can still just, the 1% piece of it, okay, you're talking about another element that you're able to, another figure that you're able to put into that calculator, and you can actually put in 0.5%, 0.75%. You'll see with some of our trades, we only risk maybe 0.5% instead of 1%. 1% to me is the maximum that you need to risk on any one trade, because you want to be able to, number one, you want to have peace of mind trading, and risking 1% will absolutely do that. You can make so much money just by risking 1%, but then you got to figure out the other side of it, which is the position size. Now I'll explain all of that. I'll show everybody, the actual tool, and there is a button also on your members page there, or on the newsletters that I send out, that you can click on, that'll walk you also through the probability calculator.
Yeah, I've been using it, practicing using it. I'm just trying to put all the pieces together. It's different. It looks like it's a really good tool.
It's really helpful. It's really helpful to everybody because, the thing is, each of us absolutely put in time behind, our trading techniques. And this is the cool thing about this tool, is this tool can be used if you're a subscriber to Tom's newsletter and he says, he's going to take this trade and put in this stop, at 80 cents or what have you. You put in whatever his stop is, and on the stop multiplication factor, you put in the figure of 1, and it does all the math for you, and it'll tell you what your position size should be, and you can decide whether you're going to risk 1% on the trade or 0.5%. It works on Basil's system. Basil, sometimes they'll say take 1/3 of a trade or 1/4 of a trade. So then you'd just be putting in 0.25. As far as what your risk is, instead of 1%. It works for Larry's system. It works for David White's system. It works for Ken Shreve's system. It works for your own system, which is a beautiful thing, and it helps you do all those calculations, gives you all that information, and and Jerry, the beauty is you're one of my clients, one of my subscribers. If you still have questions, you give me a call after the show, and I'll walk you through everything. I'll spend time with you, no problem. Okay? Would love to. All right. Thanks for calling, Jerry. Folks, we're going to be going into our last segment, 877-927-6648. And you got the Dow down 90, S&P's down 10, and we'll be right back.
Well, it's always better when we're together. Yeah, it's always better when we're together.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks, something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. Dow down 92. S&P's 11. Composite is pretty much flat, down half a point. Small caps leading the charge on the way down 8 points right now. And thank you, Jerry, for calling. You know, he's talking about the probability calculator that I have, and we're talking about the average true range. Now, what you want to do is you want to go back and listen to Larry's show that he did yesterday. He was giving away a trade on IBM. I'm not going to give away what that trade was. Go back, listen to the archive. But what you'll also hear when Larry was talking about the trade and the trade setup, which is really what's so important, because in this case here, it was a 3-drive to the top pattern that he was taking a look at, which I've got. If you're watching us on TigerTV. It also is going over some swing points on lighter volume. You know, this was a trade on Big Blue that had basically everything. And it doesn't mean that it's going to work. But if you listen to it, you know, Larry, when he was taking a look at his stops, was looking at the average true range. And that's something that you automatically get when you use the calculator that I've used. It automatically calculates that for you. And when you set up a trade, folks, what you don't want to do, even if you're working on something intraday, you don't want to do all the work just to let the noise of the market you know, take you out. And so you want to make sure that you've got a wide enough stop, and that really should be above the average true range of the day. In the case of the IBM trade, Larry used 1.618 as the stop multiplication factor, which Jerry was asking about. And you absolutely want to do something outside of that daily noise, because you've done all that work for you. Don't assume that you can know exactly where the market is going to stop, you know, and you've got that noise in there. Instead, make sure that you're in the trade, you've done the work, you've got the right position size, and then let her roll. Now, let's go take a look at just inside the one of the sectors inside the S&P, because, you know, there have been such great signals for us, you know, during this trading environment here, going back and taking a look at, you know, this range that we're in. And the consumer discretionary index, that is the XLY, gave a real nice signal yesterday. Now, the high in this consolidation has been the September 20th high. You did a high of 38.23 on 13 million shares. What does the consumer discretionary do yesterday? It gets up above that, closes below that on 9.7 million shares. So 9.7 versus the 13, that's almost 14 million shares. It gave you a clear signal that was a failure. That's what we call a failure on price and volume, where it gets up over the swing, closes back lower, and it does that on lighter volume. Now, with that being the case here, now I'm not in this trade, and you know, you've also got some, you know, you've got some volume bars that have been to the downside. You've got that on September 22nd. The XLY came down with 28 million shares. If you go back to the August 9th time frame, you had 25 million shares on the way down. If you take a look at it on October 3rd, you had 22 million shares. You had 17 million shares when it made its next low. And this is kind of interesting, because you can take a look at how this has been going between this consolidation area. If you just simply go back, I'll draw the line in here on the August 9th low, and draw that across. And what we can see is on that August 9th low, what you had was 25 million shares. It came into that and tested that on October 4th with 17 million shares, closed above it. So that was also a failure on the bottom side. And when you fail on the bottom, what it does, is it's going to move up to the top. What does the consumer discretionary index do? Does exactly that. Finishes that pattern yesterday, says, okay, I'm not going to stay up here. I finished that on lighter volume, and now what the consumer discretionary, the XLY, wants to do is it wants to come back down towards the bottom of that range. Probably will get down to the 34.99 area, where you've got that 17 million shares. If you're coming in that with more than 17 million shares, he wants to go down to the bottom. Stay tuned, folks. You got Larry Pesavento coming up. Thanks so much for joining me, and I'll be back tomorrow morning at 9 o'clock to kick things off. Have a great day, safe day, and I'll see you soon.
Yeah, it's always better when we're together.